following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. And if we don't get a phone call today from Priceline Charlie in La Paz, Mexico, I'm going to send out the Mexican State Police. As you can see from this chart, we made that three drive to a bottom pattern back on early February. And the stock is now up $125 a share right now. And I know he bought some of that, but I just wondered if he held it, because I know he wanted to sell it somewhere around the 1220 level, which was that old resistance. So more power to you, Charlie, if you're listening, but I had it spot on, my friend. Okay, we're going to take a look a little bit about the stock market today, because we've had some really nice swings in the market recently. Yesterday, when we were on the program, one of the things that we talked about was, the market had been up, quite a bit since Thursday, and we had this pretty good run up. And what we were thinking was we would get maybe a $20 20 handle, pullback, which a little ABCD formation down there at around, 1872, somewhere in that ballpark. The low came in actually at 1869 and a half. That completed that ABCD retracement that we had. It was a small one, but it was still 20 points. That was the biggest one we've had since, Thursday, when we sold off and made the double bottom. But what's happened after that is what's interesting. And that is that we had a really nice pullback last night. You'll see it forming here as we go through. And if you like Fibonacci numbers, this is probably something that you'll be able to comprehend. But as you can see, we had that three drive to a top pattern on that 15-minute chart that goes over a 3-day period. Yesterday's low, the overnight low, came in at exactly 1881. And that was the exact 61% retracement for that particular move. And following that, as you can see here, we had a really strong mid-morning in Europe run up here, and we had got all the way up to the 1896 level. So where does that take us to where we're going to be today? And this is what's going to be interesting here is because we've got this pattern that is going to be quite interesting. If I can get it up, and I know I can, just give me 1 second. I have it ready. I think I have it ready. Let's see where it is. It is ready. Just give me a second. There we go. And this is where we're trading right now. At least that's the time before I came on the air. We were trading right up here. What we're doing now, folks, is we're completing this this ABCD pattern. Now, there's actually a mathematical formula for this. It's quite simple. You don't have to be a rocket scientist. Is AB equals CD? In order to find point D, all you do is you add B plus C, and then you subtract A. So if we took the low that we made back on the 10th, we made a low at 1803, and if we add that to the other high that we had, which was 1896, okay, we add that together, and then, I did this wrong. I have to have B and C together. Boy, just nothing like mathematics. The old tarot day. Oh, by the way, folks, this is a major astrological day today. Really, really major. This is Norm Winsky's birthday from Astro Trends. So if you get a chance, drop him an email and wish him a happy birthday. He's been one of our contributors here at TFNN, doing a fabulous job, and we certainly want to wish him a happy birthday. But let's get back to the ABCD formula. It's B plus C minus A. So B was 1896. C was 1881. And then you subtract from that the low, which was 1870, and that gets you to 1908. is where you are now. Now, if we go back farther, we have a BC swing where we went from 1903. Oh, Larry, I got this all messed up. I have to bring this out in just a minute here. I had to pull the chart up, and I don't have it in front of me right now, so I'll have to get the numbers correct. I wrote them down, and I can't remember where I put the darn things. Anyway, the ABCD on this pattern that we're looking at here measures, the longer one measures to 1960. What I think is going to occur today is that we're going to have some pretty good correction here in the area of the 1908 level, and that's all I'm looking at. That's really what I'm watching is that we should get a pretty good correction here from 1908, and that correction should be no more than about 20 S&P points, and then back off one more time, and then head up to 1960. Folks, these markets are acting incredibly bearish, bullish. As we mentioned last week, they had that potential to come in there, and then of course Mr. Z has posted his S&P chart showing the big ABCD bottom that we had in here, and you're seeing it everywhere. You're seeing it in the transportations. You're seeing it in just quite a few things. So you've got to be you have to be on a bullish side right now. Even though I'm long-term very bearish, this is not acting bearish right now. Maybe it'll change today, but right now, that's the main thing of what we're looking at. These things look quite friendly. Oh, by the way, we're going to have our good friend, my good friend, Byron Tucker is going to be our guest at the break, and we're going to be talking to him about some old days at Goldman Sachs and some trading ideas that he has for us. So we'll keep a close eye on that. But right now, it looks like we are in the midst of a bullish run here in the market. I believe that 1908 will cause a little bit of a problem up here, maybe major problem. I don't know, but we'll start to see if that's the case. In our bond market is going down, which is what we expected to do, because the risk off is on now, so people are coming back in to buy stocks, and these rallies, these bear market rallies, and that's what we're having right now, can be very, very strong and last a lot longer than some people think. And basically the pattern was lined up, for the market to go higher. Fortunately, we were able to see that, as was a few other people on this show besides, Basil Chapman. We had Steve Rhodes, and we also had John Logan was also, watching with his TAS formula, and he's traveling to Asia this week, so we haven't been able to have him on the road. But he was saying that there was a lot of major support down there, as was the other two gentlemen that I mentioned, Basil Chapman and Steve Rhodes. So this is what the patterns are telling us, at this particular time. So that's mainly the main thing that I'm looking at. Now, in the currency markets, we've had a pretty good run up, in that dollar yen. It's rallied over 300 pips. And then in the last day and a half, since we made that high up around 14. Oh, we got to take a break already. Holy cow. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I've posted into Tiger TV the chart of the Dow Jones E-mini contract that we follow. As you can see, there's a really distinct three drive to a bottom pattern there, as you can see by the markings of 1, 2, 3. That was a pattern that was really brought to attention by a man named George Cole in a book called Keys to Speculation. He was also a good friend of H.M. Gartley. Most of these dudes lived in either Chicago or New York, and they hung out together, so they shared a lot of great information. So that's part of the reason why a lot of this stuff comes together. If you remember Edwards and McGee's book on technical analysis, which is one of the the Bibles of technical analysis, McGee was actually the son-in-law of Schaubacher, and Schaubacher was one of the big speculators from the 1920s, and he trained his son-in-law how to do this. And I think he's still alive. He was a few years ago. He was in relatively poor health, but he was in his late 90s and still living in the Boston area. So a lot of these patterns are, they've been in the common area, common good for a long period of time. All we try to do is to identify them by looking at the ratios of the Fibonacci summation sequence. That's pretty much what we're watching. Now, there's a couple of things that are happening in the news that I think is important. Larry Summers, the former Secretary of the Treasurer, came out today and said thinks it's a good idea to get rid of the $100 bill. Well, that's really a good idea, because that'll put us into a cashless society, and the government will be back to electronic cash, and the government will have total control of all the cash. They already have control of it, or at least they give it to us to let us spend it for a little while. But if it goes to electronic, then look out, Gertrude, because it's going to get pretty nasty, So we'll see if that's. I just don't think it'll pass, but hopefully someone with the brains of a turnip will come in and be able to come in and tell us that we are doing something wrong here with that. So we'll watch that very closely. Also, the former fellow who was in charge of the financial engineering of the 2008 debacle, Neil Kashkari, who is now the Federal Reserve president of the Minneapolis Fed. That's one of his rewards for doing what he did. Said that the banks need to be broken up. The banks are going to break up themselves. You don't have to worry about that, because once we're finished with this thing with quantitative easing and this negative interest rates, there's going to be a few pieces on the ground that people will be able to pick up. I haven't heard much about Bitcoin recently, so I don't really know what's going on with that. I've seen a couple of stock charts, through the years, but I don't know what's going on with it. I don't understand that either, so it's not a factor that I'm looking at. The question that we had this morning about the grains, we're getting very, very close. We think to a buy here in the wheat, corn, and beans. They're holding levels that are pretty supportive, around 350 in the corn and 850 in soybeans. And those are near cost of production levels from what Rich Anderson's told us. So we will watch it. But right now, there's not really much to do. The action happens to be on the bullish side of the market, and we'll see what happens. By the way, if we do get above the 1912 level, there's two other levels that are up there that have already been posted in the Tiger TV today. One is the 1810, which is that 1.618 expansion. Of course, in 1960 is the larger ABCD that started back at 1803. If you'll remember, we went 1803, I believe we went to 1893, then we backed off to a 38% retracement down to 1870. And then if you add that together, that'll take you to 1960. That'll get you up to the promised land, up into that area, which is a longer-term 61% retracement. But if you look at this chart that we have in here right now of the Dow Jones futures, looking at 4-hour chart, which gives you, a couple weeks of looking at it, you can see after the 3 drive to a bottom pattern, we've already made the 61% retracement. We're flat heading up there without any trouble at all. Okay, first question comes in on the crude oil. Well, crude oil did something very exciting yesterday, folks. It stopped exactly at the 61% retracement that we were talking about. We got down to the where is it here? There, we got down to 30.75. That was the 61% retracement of that whole move down. It hit it perfectly. The low was 30.69, and that was the exact 61% retracement of that whole move that we had from the big 12% up move that occurred on Friday, and now what we've done is we've rallied back to 61% of that move. So if we can get if we can get crude oil above that $34 a barrel level, folks, it will easily go a lot higher, most probably to around $38 to $40 a barrel. We're still in a major bear market, and we're just looking at bear market rallies in these things. That's pretty much what we're looking at as we walk through this sequence of trying to pick the highs and lows of the day, looking at some of these patterns that we have. And that's what we're trying to do, is we're just trying to line up the patterns that show the best. Now, an interesting one now is the gold market, because, we had that high up around the 1262 level. We broke down to 1191, which was the point of the old breakout that Steve Rhodes, really pointed out to us yesterday in his charts. And since that time, all we've been able to do is make a 382 retracement up around the 1218 level. Now, if the 1218 level is taken out, an ABCD structure will form in gold from the range that we had all day yesterday. In other words, we went from 1891 up to 1218 and then down again to the 786 at 1897. That measures to 1224. that would be a $34 rally off of the bottom, and that would be at a 50% retracement of that whole move. And as we know, the harmonic numbers in gold are 36 and 18. That's very, very close, to that harmonic number. So there's going to be a lot of resistance should gold get up into that 1224 to 1226 level. That's the way it looks, right now. That's the bottom line of what we're watching right now. One other question is about this number that we talked about on the stock market at 1908. So far the high has been 1908.75. We're down about 5 points from that, but it's still kind of early. And but that is pretty strong resistance there, because that's an ABCD structure, and that's what we base almost all of our technical analysis on, because that's how the market works. It goes up, down, and sideways in that thunderbolt or ABCD format. It doesn't work all the time, but it does work, better than most. So we're going to have Byron Tucker on at the break, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, looking good, Billy Ray. Feeling good. Lewis, I think we have Byron Tucker from the Chicago Mercantile Exchange Days on the line. BT, are you there?
I'm there, Mr. B. How are you?
I'm above ground, staying away from open graves, my friend. Listen, the first question that we have comes from an area that you should have some expertise in, and that is the old days at Goldman Sachs. They wondered about this office that was opened in Utah, in Salt Lake City, quite a few years ago. What happened with that, and do you know anything about it, Myron? Because I certainly don't.
Well, starting in the 70s, the Goldman boys were hiring Brigham Young University graduates for whatever reason. Someone got in there and started bringing friends in, so there was always a connection to Utah. And then around 99 or 2000, they set up that office as a cheap solution for a tech-focused business, but the crash in 2000 pretty well wiped that out. But since they had the office, they decided to turn it into a private wealth office. And since a lot of the Mormon youth go on missions, they spoke many different foreign languages, especially Portuguese. So they targeted the Brazilian high net worth market until Hurricane Sandy came along, when they realized that the redundancies of their system there saved their bacon here in New York. So now it has 2,000 employees, it has private wealth, but it's also a secure backup for the global facilities. And there are 4 around the world: Hong Kong, London, New York, and Salt Lake City.
Well, there are 2,000 people up there working, huh?
Yeah, it's been a real employer for that area.
Boy, that's a tremendous, a lot of people for that area, that's for sure. Okay, the next question that we have is from one of our listeners, is what is the effect of this high-frequency trading? Are you familiar about this logarithmic or high-frequency trading? I know you're in New York and you talk to a lot of people. What's your thoughts on that?
No, I know a lot of people that are eminently involved in it, and it's interesting. There's a lot of talk about delaying bid and offer holding periods up to 1 second. I believe that. It does. I'm told by a knowledgeable source, 94% of the volume on the New York Stock Exchange on a given day. It's at least 70 over, say, the course of a month. It adds short-term ephemeral liquidity to the market, but my biggest concern is, as we saw in August 24 and in the flash crash, with an electronic trading platform, these guys can all go one way if they see an opportunity, or they could simply pull their bids and offers and create huge air pockets that can have very deleterious effects on the market. So I think, as much as I believe in free markets, I think it needs to be understood a little better and perhaps have a few constraints. Because right now it seems parasitic. I have read that the high-frequency algorithmic traders are extracting $60 million a day collectively out of the market by wiping out any kind of advantageous fill on a bid and an offer by the foundations of investors. And that's a pretty big number.
Wow, that's a huge number when you stop and think about it. It's on a daily basis. Now we have one other question that we have, and that is the news that comes out. Sometimes the news is really, really bullish or really, really bearish, and the market can react totally differently from what usually happens. And I know you and I have talked about this many times over the years. You want to share any thoughts about that?
Well, on the floor years ago, Larry, we discussed the fact that news follows markets. Markets don't really follow news more than maybe over a 2-hour period. And Robert Prechter, as you may know, has his whole view on socioeconomics, where he thinks public mood, in fact, shapes market direction and also extremes, rather than the market affecting how people feel about things. So and the news, I think most people at this point who watch it on a regular basis realize it's all skewed, and it's all by the sell-side guys off the wall.
Mm-hmm. Well, we just had some of the worst news from China in months, and the market's making a 3-week high in China. So you can take that news and forget it. So we'll see what happens.
Markets are great discounters of reality. People involved in markets know more than.
Mm-hmm.
But I did see a piece of news today that's really interesting. A former Goldman Sachs senior partner who now sits on the the board of the Federal Reserve in Minneapolis thinks that the big banks are too big and they should be broken up. And so my first question is, who do you think would get all the investment banking fees for breaking up the big banks?
That's Neil Kashkari, right? Someone else this morning had talked about that. So that's another thing. I think, frankly, you and I have talked about this before. I don't think that the banks are going to have any problem getting broken up. I think they're going to break up all by themselves once this quantitative easing thing is, out the door. But we'll let history decide whether that's going, if that's going to be the case or not. We have another fact. Since we have that on quantitative easing, that's one of the questions that someone's asked to ask you is, what is your feeling on what this means with quantitative easing? Because you've been around for a long time. You ran Goldman Sachs's desk there at Chicago and worked for Leo Melamed. So what is your feeling about quantitative easing, long term or short term? Do you have feelings on it?
Well, it's an untried experiment, and it's basically an extreme market manipulation, and market manipulations don't work. So eventually it's going to cause, it's caused such an explosion of debt. Apple is trying to raise $12 billion to buy their stock back.
Apple's trying to borrow the money to don't they have $170 billion in cash? Of course, that's offshore, probably.
It's offshore, exactly, and so they want to borrow $12 billion to buy their stock back. And that, there's so many disconnects here. And if we actually go to negative rates in this country, it's going to destroy capital markets. It's already caused a massive misallocation of investment money. It's wiped out all the generation of savers that thought they were going to live on their retirement. It is one of the singularly most destructive things I've seen, but it has facilitated the survival of these banks, because otherwise they would have been liquidated like they were in Iceland, and we would have had a restart, which actually would have helped the economy.
Sure. Okay, we're going to have a break here in about 30 seconds. When we come back, we've got a couple other questions to ask you. Plus, I'd like to go over a few old stories from our days down at the old Chicago Mercantile Exchange. Boy, Byron, did you ever think things would be changed like they are now 30 years ago from when we first met? It's really quite amazing in my opinion, but we'll talk about that when we get back from the break. So we'll be coming up here in the next 10 seconds, I think, with the break from TFNN. We've now got up to 1910 in the S&P, and it looks like we're going to be heading towards at least that 1918 and possibly the 1960 level very, very closely, because we certainly have a lot of emphasis on this market to the upside. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we're talking with Byron Tucker, formerly the manager of the Goldman Sachs commodities desk at the CME when I first met him back in 1982. And Byron, things have changed a bit since then.
Ways we never imagined, Larry, and I wonder what's next. If we couldn't imagine this, good God, we can't even begin to imagine what may happen next.
This is absolutely true. You stop and think about, we used to trade, 10 and 20 S&Ps, like it was nothing. And of course, the ranges were only 5-6 points a day. But now they're trading, millions and millions at a time. And the foreign exchange markets have, because when we were on the floor there, they had just opened the CME currency pits, and they were relatively small compared to all the others. But now foreign exchange is so much a part of our society, and many people don't even understand that it's there. That's what's really surprising.
Oh, absolutely, Larry. And I was thinking this morning, I really liked the days when the market opened at a certain hour and closed at a certain hour. When I look at stocks today, the markets start moving. I mean, and the Fibonacci retracements are occurring at 1 and 2 in the morning. Well, I'm not up at 1.
I know the feeling, because I have my alerts set, and when I hear the beeper go off, I'm such a light sleeper. I'll go in and take a look at things. And but you're right, because there's so much volume worldwide. Just looking at the DAX, the German DAX index, which is the equivalent of our S&P, that trades incredible volume, and it follows the same sequence of numbers that we look at all the time. Byron, do you remember the little card I used to have in my jacket pocket that had all the fib numbers on it, and people would always ask, "What's that secret card that you had?" Do you remember that? We had a lot of fun with that through the years.
I had one myself, and we were always looking at the board trying to calculate these numbers, but it worked. We made it.
It sure did. Yeah, we've had so many experiences together that Byron, the one question I have, you've been trying to write a book. How's that coming along?
Oh, Larry, as they say in Texas, I've been meaning to.
I hope someday that you do it.
Dragon recognition software, and I want to start trying to. I have it all scoped out. I just need to actually put it together.
Take some time to actually walk through it and get it done.
Right.
But you just get it outlined and do it, because you've got so many great stories and ideas to put in it. And not only that, but your philosophical things. are really fabulous. I really enjoyed that very much at all. We have another, someone's mentioning here in the room, you might hire a ghostwriter and just dictate it to them. Well, that's a possibility, I suppose. We have one other question.
In English literature, so I'm I couldn't do that just out of some sense of purity.
Yeah, a little respect for the trade itself, huh? Okay, now the question that someone has brought to our attention here: who is the most influential person in your life as far as the trading goes in the business?
Well, honestly, Larry, it's you. Frankly, all the stuff
I wasn't expecting that answer.
No, seriously. We dug into Fibonacci before anybody knew what it was. You were working with astrology in the mid-'80s when it was a dream in most people's eyes, and you put the first major book out after Commander Williams. No, I mean, you've had a tremendous impact, and all the people you've taught and the people I've met through you, it's quite extraordinary. I mean, I learned some key lessons from Leo and a few other people, but, your impact, and I really, this isn't a paid-for commercial, your impact is really far and wide, Larry, with a lot of people. Helped some of people.
Well,
bravo.
Okay, well, listen, the next question that we have is we've only got a couple of minutes here. What's your outlook for the stock market for the remainder of the year? They would like to know the highs and lows and the exact prices.
No, we're going to have a rally, and I don't think the downside's over with yet. There's still a lot of bulls out there, it's really a tough call. I try to look about 2 to 4 weeks out, and that's about the best I can do because there's so many forces at play. You have Europe, you have Germany at odds with Mario Draghi now, the European Central Bank, and now we have this political football in this country. I read a thing on Zero Hedge today, Larry, not market-related, but it's interesting. Judge Scalia was found with a pillow over his head. This is on Zero Hedge today.
Well, how can you prove whether that's the case or not?
Some witness said he saw it. Who knows? But this whole business about the Supreme Court is going to create so much turmoil in Congress. I think it's going to have an effect on markets, Larry. I really do.
Well, that reminds me of that movie with Julia Roberts. What was that called? The Papers or something? Shucks, I can't remember that name of that movie where they killed the 3 Supreme Court justices in order to get their people in. Boy, I can't remember the name of that movie. I really enjoyed it too. But anyway, that could be part of that. Who knows? There's a lot of stuff going on in the world that we never know about. So who knows?
Conspiracy theory. I think everybody does.
Well, we got enough of those for sure. We had those during every year that we've had.
Remember, we talked earlier, Larry, about this. When a market's going to go up, it doesn't matter what the news is. I saw that in 1980 when I with a major trader on the floor. Even the Fed. That's when the Fed really meant something in the markets, and there was a big Fed number, and it was very negative. The market went up because it was time for it to go up. So in that regard, we have to take all this news with a grain of salt.
Sure. No, it was the name of that movie was The Pelican Brief.
Oh, right. Yeah, that was
with Julia Roberts. I don't know about the conspiracy, but boy, I mean, somebody as influential as Judge Scalia, I mean, why would anybody, if they were to take his life, why would they leave the pillow over his head unless it would be a sign to somebody else? Maybe a message like, make you a deal you can't refuse. Who knows?
I don't know. It's a disconnect, but there's no autopsy schedule, so I don't know.
How can there be no autopsy schedule on somebody as important as him?
Makes you wonder, doesn't it?
Oh, now that's true. Who knows? Well, we're going to come up to a break here pretty soon, but I wanted to thank you for being our guest, and we'll have you on soon. And hopefully, you'll be able to come out with your book soon, and you'll be another. What do you call it? Patterson. What's his name? Not Floyd Patterson. James Patterson. James Patterson. So we'll see.
I appreciate the encouragement.
Yeah, well, I'm going to keep ragging on you is what it is, BT.
Okay.
All right, we'll see you. Thanks a lot for joining us here at TFNN. We'll have you on again real soon.
Thanks a lot.
Okay,
See you.
you
Bye.
bet. That was Byron Tucker of the old CME days. He happens to be a good friend, and we met back in 1982 in the middle of a big snowstorm as he came into the CME wearing his big galoshes with his Brooks Brothers suit, and I started laughing. And he sent his girl over to say, "Why are you laughing at him?" And I said, "It just looks really funny." And then I realized that everybody on the floor was doing the same thing. Me being from California, I didn't even have any rubber boots, so who knows? Okay, we're going to take a break here in just a second, and then we're going to come back and wind up the show to see what's going on. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to be watching this S&P really closely here today because of this area. 1909, the high has been 1911 and a half. Is really strong resistance. It really is because of the ABCD structure over that half-hour time frame that we posted in the Tiger TV Den earlier today. As far as the gold market, we mentioned that the real key level to look at the gold market yesterday was the 382 at 12.18 an ounce, and if we get above that, we could get up to the 1224 to 1226 level, but I don't believe gold will get much higher than that. And the reason for that is that long-term chart that we've looked at, that we focused on in the newsletter this past week at 1262 is the major Fibonacci point from 1984. From 2014. So we want to watch gold at that 1226 level, 1224 level if we get to that level. That's the main thing. As far as the bond market, it's still going down. We're now down 7 handles from the high, folks. That's exactly the same thing that we had the last time when we had the major top. We also had that shooting star pattern that we've talked about and we've illustrated here last week when it was forming. So that tells us that interest rates look like they are going to be going higher. That has nothing to do with the stocks because of the risk off and risk on. You know, as bonds go down, that means the risk is off, and so they put their money in the stock market. So that's all that means. There's nothing more than that. There's no fundamentals to try to read into it or anything like that. So that's the bottom line of watching what that's happening. Now, there's a lot of rhetoric about the euro being taken out of Britain, out of the UK. There's going to be a referendum on that in the next couple of months. I don't know exactly when it is, but the way the euro chart is acting, it certainly looks like we're heading down, towards parity, and I think that's where we will hit. We'll hit somewhere between 100 and 99 in the euro, and that'll just be in the mid-range of where we've been recently. So that's it. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.